Hello everyone, my name's Carlo. Welcome back to CMC Markets Trend Tracker series. Today I'll be analysing some of the most popular products on our CMC Markets platform, looking at trends and also identifying factors to look out for going forward when trading these products. First up, we have gold, which has been very hot throughout 2024. Now, gold traditionally has been a safe haven investment, a great store of value, a hedge against inflation, and also hedge against currency devaluation. So why has gold rocketed in 2024, particularly post-March? And there hasn't been any one standout reason as to why gold has shot higher, been a combination of technicals as well as fundamentals. Let's look at some of the reasons why gold has pushed higher. There's been very strong buy momentum behind it, of course, as we can see here on the charts. The stochastics are in the overbought territory. It just suggests that the trend has been rising very, very strongly, but it has been a continued escalation in tensions across the Middle East. It's also been the fact that central banks have allocated more of their reserves into gold, as well as other perceived hard currencies such as US dollars and euro and the yen. In fact, yen weakness and the continued yen weakness over the last few years perhaps has removed some of the attractiveness of investing in yen and moving their assets out of yen into other currencies, including gold as well too. And technically, gold has slingshot through 2150. You can see there on the chart, when we have a strong uptrend in place, as we have here on the daily chart, it is difficult to be a contrarian trader and go against the trend, especially when there are factors, multiple factors, suggesting that gold continues to push higher and technicals are very strong as we have in place right now. Now, it's important to note that if we do get some kind of breather or consolidation in gold, prices could pull back to the 20 EMA in yellow at around 2,230 US dollar an ounce and still be within a very strong uptrend. And also then you've got the next support level around 2150. So they're the key levels going forward. We do have US CPI coming up this week, but it's another inflation print out of the States. And what we do know in the States that the US economy is growing quite strongly. The recent non-farm payrolls data has confirmed that growth is strong and inflation is falling. And that is a decent recipe for the economy, for confidence, and also US dollar is fairly choppy. However, the outlook for the US dollar, if the Fed does come to the party, confirm a few rate cuts later in the year, then that will put further upward pressure on the gold price. Next, we have the Aussie dollar chart. Now, what I'd like to point out with the Aussie dollar chart is that the Aussie has been trapped in a range of 64.50, 66.20 throughout most of 2024. Typically, when you get a scenario of record highs in global equities and also record highs in gold, they are supportive factors for the Australian dollar. But this has been offset this year by plummeting iron ore prices, which reached a 10-year low of about $100 US per tonne last week. And that has kept in check any Aussie advances. And that is why it's been trapped within that range for the majority of this year. Technicals suggest the same picture as well. The trend is quite clear there. It's sideways. The EMAs, the yellow and the blue EMAs, are touching and headed sideways. Clearly support is 64.50, resistance around 66.20. Right now we're at 66 cents. Where to from here? We have the US CPI data coming out this week. If that US CPI data is sticky, inflation remains stubbornly above 3.5%, nowhere near close to the Fed's target of 2%, then the US dollar might retain a bit of a bid tone. And then that puts a bit of downward pressure on the Aussie. And don't forget that the interest rate differentials is the key factor driving any exchange rate. At the moment, you've got the Fed funds rate at 5.5%, the Aussie cash rate at 4.35%. There's a difference of 1.15% in the US dollar's favour. So if everything else is equal, the Aussie versus the US is likely to trend lower over time if nothing else happens. So keep those things in mind in terms of the overall larger picture. But At the moment, stick to the lower time frames when trading the Aussie, which is headed sideways at this stage on the daily chart. And lastly, we have the mighty dollar yen. Now, wow, look at this chart here. Pretty strong uptrend in dollar yen, but it has hit a brick wall up around 152, the figure. So dollar yen continues to defy gravity despite a Bank of Japan rate hike in March, their first hike since 2007. That didn't help the yen much at all. And also constant threats of intervention from the Bank of Japan and Ministry of Finance have fallen on deaf ears, as it has done the last decade and a half or so since I've been trading. Now, the US dollar as well has rallied on stronger economic data, most recently non-farm payrolls data on Friday, and continued pushbacks on rate cuts from Fed officials. Now, that is a picture we have in US dollar versus yen. You can see technically it is quite a decent strong uptrend with 20 EMA above the 50 EMA, yellow above the blue. Resistance is key, 152 the figure. And it has just parked itself around here for the last few weeks. Traders need to determine whether from here intervention is a truth threat will happen or not. And so what we need to focus on is concerted central bank intervention. So the last 2 to 3 decades that I've been trading dollar yen, intervention by the Bank of Japan and Ministry of Finance can be successful if they enlist the assistance of other central banks, the Federal Reserve, the Bank of England, and others. If they go it alone, then the effects have been very minimal and not long lasting. So these are some of the things to focus on when looking at dollar yen. Of course, the CPI data coming out may also be a catalyst for whether dollar yen finally breaks above 152 or fails here miserably and starts to retrace. So dollar yen, often a volatile currency pair, plenty of trading opportunities in the past in dollar yen. Going forward, you can see here the stochastics down below are in overbought territory, but it just means the trend is higher and has been trending that way. Momentum is with dollar yen. Pullbacks have been shallow since the start of March. The 20 EMA and the 50 EMA in yellow and blue act as support lines. So they're the levels to keep in mind going forward in this currency pair. That concludes my analysis. Thank you for watching, and I'll see you in the next video.